Chip makers, semiconductors, firms like NVIDIA, all of those are very hot right now. It discussed a lot on the news. We see that volume on semiconductors spiked in late May when all the traders started chasing these chip makers. And if you search for a lot of trading, investment related articles online, you'll see that there are still some traders who are wondering if it's a good idea to jump on board now. But if you stop and control your emotions a little bit, you'll understand that buying now might be a big mistake. The volume in late May on stocks on semiconductors was the highest all the way since January 2022, which in turn was the highest volume all the way since 2018. And while some traders do try to use volume to find some lows, buy low, sell high, the difficulty is that not all volume spikes correspond to a price low. Instead, volume spikes often correspond to a significant change in momentum. And yes, sometimes it is a change in momentum from a downtrend to some sort of a bounce. But again, it's not always the case, so let's have a look at what's happening to the stock market in more detail. And as I mentioned to the members at myfinanceteacher.org a couple of days ago, we were expecting S&P 500 to break above this August 2022 peak for a short while. Zooming back on the ongoing daily cycle, we see that it's 39 days long, and the usual duration for these daily cycles is 2 months. So again, as I mentioned recently on my website, there was still time for a short-term continuation higher within the ongoing cycle, but pretty soon we would expect a decline down into a short-term daily cycle low, meaning that this breakout above that August 2022 high is most likely going to be a fake out. We see that 14-day RSI is now very close to overbought. The price, the index, has poked above relatively wide Bollinger Bands. The bands are not extremely wide yet. We are in the process of poking above those wide Bollinger Bands repeatedly. And as I mentioned many times in my previous videos, not the first but a repeated poke above wide Bollinger Bands is yet another sign of a likely turnaround in momentum. So one of the scenarios that I see, probably one of the most likely scenarios, is a bit of a poke higher above that August 2022 high. We're in the process of doing that now. As I mentioned, that's likely going to be a fake out with a decline down into the daily cycle low, perhaps to retest the previous intermediate cycle high, which might also bring us relatively close to retesting that 50-day moving average. By then, by the end of this daily cycle, we'll be much closer to the usual duration of around a couple of months. But the intermediate cycle isn't extremely stretched yet. Usually these cycles last for around a half a year or so, so we still have time for a third short-term daily cycle within an ongoing intermediate cycle. So another short-term bounce into that third daily cycle, followed by a more significant decline down into the intermediate cycle low, perhaps to retest the 200-day moving average at a bit of a round number at 4,000. That's not out of the question, not at all. After all, S&P is getting kind of far from its 200-day moving average at around 9% above it right now. It's not that often that S&P 500 is stretched 9% or so above the 200-day moving average. For example, at the end of 2021, that's at the end of that raging bull out of the pandemic low, so close to the very top of that bull, S&P was above the 200-day moving average by anywhere between 9% and 15%. So the current 9% stretch above the 200-day moving average is getting somewhat extended. Plus, if you look at this optimism index, we see that it's well above 70. It's at 77 right now. And historically, as you see from this chart, usually it's not a particularly great idea to chase when everyone is already excited about their gains on the stock market. A relatively good buying opportunity most commonly appears when this optimism index is much closer to this green line around the area of 30. So again, the stock market is somewhat overheated right now, according to the market optimism, as well as fear and greed index from CNN, which is at 79 right now. That's pretty high. In fact, anything above 75 is called extreme greed on this CNN fear and greed index. And the level of 79, the current level, is the highest level since this early February this year. which in turn was the highest level for quite a while. So again, if you control your emotions, try to use a cool-headed analysis as smart money should do, you'll notice that they don't have that much confidence in buying the stock market right now. The blue line over here is smart money confidence, red line over here is dumb money confidence. And yes, sometimes dumb money might turn out to be correct, as in say late 2020, early 2021, when dumb money was extremely confident, with smart money on the opposite extreme. But at that time we had trillions and trillions of dollars being printed in an attempt to push everything out of that pandemic low. What we see right now is again a situation when smart money confidence and dumb money confidence are at opposite extremes. And besides that fluke in late 2020, early 2021, when dumb money turned out to be right, generally historically, you do want to follow smart money, so better be cautious with chasing the stock market right now. And again, let me remind you that this breakout above the August high and these expectations for what might happen into FOMC meeting and beyond into the intermediate cycle low several weeks ahead. We had a bit of a discussion of all of that over here a couple of days ago at myfinanceteacher.org. So for regular updates on the general stock market, on the major miners, as well as some of the juniors that might provide that additional torque once precious metals break to new all-time highs, consider joining us at myfinanceteacher.org. So see you on the other side, and before then, have a nice day. Bye bye.